Hello and welcome to today's NinjaTrader ecosystem event, Tradesight Pressure Threshold presentation. My name is Chris and I'm a platform representative at NinjaTrader. Before we start the webinar, I have a few housekeeping notes. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to NinjaTrader Brokerage using the phone number or email on the screen. Lastly, if you are new to NinjaTrader, please make sure you sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link on the screen and then clicking Get Started under the Welcome section. Before I turn the mic over to Rich, it is important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. For more information, or a copy of the full CFTC risk disclosure, please visit this link. Also, please remember that these training sessions are not a solicitation or a recommendation, simply educational in nature. Thanks again for joining us today. Without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Rich.
All right, folks. Welcome to today's webinar. Good day to everybody. We'll be talking about the pressure thresholds in today's presentation. Just a little quick moment here about Tradesight. We were launched in 2002, and we've been mentoring and teaching traders what we do for over 2 decades. We offer a monthly subscription service that provides tools, calls, and analysis in stocks, futures, options, forex, and of course now crypto as well. It's got a lot of traders who have learned a lot through us over the years, and happy to share a little bit of that with you if that is something that you would like to learn a little bit more about. But what we're going to focus on today is going to be one of our tools that we developed, which is the pressure threshold tool. Tradesight was founded by Chris Mercer, my partner, and I came on, I'm not sure when after that, but not that long after its founding, and we kind of partnered up and found that we had kind of similar and like trading strategies, and found that we complemented each other pretty well, and each brought some different things to the table. The pressure thresholds is one of the things that I brought to the table, and I'm happy to get a chance to share that with you all today. A little bit about myself, if you're kind of curious who this person is talking and why should I listen to them, that will be for you to decide. But my background was I started as a retail broker's assistant at Shearson, Lehman, Hutton at the time. This is going back a little ways, when they were owned by Amex, and then got my teeth wet there and kind of really developed a real appetite for the markets and what they were doing, and wanted to learn more about that. So I went through the licensing process, did all of that, and then I wound up on the trading desk of an investment firm in New York City, pretty big one, and just kind of worked there for many years, and ultimately wound up running the over-the-counter division of that. So I learned a lot about technical analysis, but more importantly, I think what I really learned is to weed out the white noise and understand what is important and what actually moves markets, and what can just kind of be overlooked and it is just white noise. So today we're going to be looking at a couple of things here in detail that I think will give you a little better sense of what's real and what can be ignored. Our general methodology at Tradesight is that the most potent indicators and tools will work across multiple asset classes. We don't really care about something that might work in one time frame for one symbol and might just only be for natural gas or something like that. What we want to do is have a methodology that can be applied to everything to give you an overall framework of something that will work in multiple time frames across all uh, asset classes, to really give you something that can be a backbone and a foundation of what you do day in and day out. One of the things that is also important is that you really want to have something that gives you a level of confidence. When you sit down, you put on a trade, you have to believe that it's going to work. You have to have confidence in your analysis, and you have to have confidence that not only are you in the right trade, it's also the right time. And so, that leads us to the idea that, if something doesn't work across multiple asset classes, if it doesn't work across multiple time frames, is it really a valid uh, technique? Is it really a valuable technical analysis tool? So we like to keep it very simple and prefer to keep a simple approach for sure. Now, what we're going to be talking about are the pressure thresholds. Okay, and it sounds like it's something fancy, but I think you're gonna appreciate what this is pretty quickly. One of the most important things is, to have an objective expectation on the day of what's normal and what might be extraordinary. Okay, so what the pressure threshold is going to do is going to give you an expectation of the range that the day's price should trade in. Okay, and there's multiple uses of the pressure thresholds. The PTs, as we call them, are calculated from near-term price action, and this is one of the key things, is they're going to be available to you before the market opens. So anything that's closed or has a regular settlement, like the ES and the NQs, you're going to have your levels set up before the next day's opening. So think of the PTs as a 2-day pivot series, but it's more directionally influenced than something along the lines of the standard pivot series. Here's a look at one particular security, and this is just to give you a little idea of what the PTs might look like. You see there's an upper band there, that's the red, and a lower band, which is the green. And those are the two pressure thresholds. The upper level is the upper threshold, that's called the UPT, the upper pressure threshold, and the lower one is the LPT. And you can see that there was a gap down from the previous settlement, but on this particular day, trading was kind of vanilla but very weak, and just kind of bumped along the lower level of that particular threshold. All right, and I should have a look at my screen so you can see the exact examples of what we're talking about here. So just to backtrack a moment here, this is a look at what the pressure thresholds look like when they're drawn on one of the Ninja charts. The red line up above is the upper pressure threshold. The green line, that's to the downside, is the lower pressure threshold. And now when these line up like this, typically what you're going to see is that trade is going to wind up playing out between the two bands. Here's another example. And you can see that these pressure thresholds are more widely spaced because of the calculation. But again, these are just plain vanilla days where there's nothing extraordinary going on, and we're trading between the two pressure thresholds, which is what you would expect on a plain vanilla and regular trading day. Here's another example, and you can see that they're spread out even a little bit more widely, but you can see that this is a very kind of non-committal day. We gapped down, moved up impulsively to try and fill that gap, but really didn't wind up doing too much, but wind up just kind of going sideways in a little bit of a soft distribution day here. Now you have just a little flavor for what they look like. Let's talk about how to use the PTs. The pressure thresholds are going to work across all asset classes. They work great in equity futures, the commodity futures. We're going to see some examples of later. They work as well. Stocks, ETFs, and forex. It's all equally relevant and equally potent. And that's one of the things with our keep it simple approach, is that we don't want anything that's only going to work on one particular thing, but not across other different classes. Here's a slide of the exact math. I don't want to hide this. This is something that that you can take a look at yourself and test the validity, if you will. But the general flavor is this: there's really essentially three different calculations, and it's kind of an if-then type of a thing. So basically, if the current price bar is above the close, okay, we're going to use this particular math below that. So that means if you're on your daily chart and you see, if you're looking at candlestick charts, if you see a light-bodied candle where you have a positive close above the day's open, we're going to use that math. And if you have the opposite, where you have the current bars close below the day's open, we're going to use slightly different calculations. And then if you've got a true doji, where you have the current high equal to the, if you have the current open equal to the close, we're going to use a different calculation. But what this does and why this is important is it makes this different than the pivot series, because it becomes directional. The pivot series doesn't really care so much about whether you had a positive candle or a negative candle on the chart, but our pressure thresholds do. So in the pivot series, you're just going to get some levels, more or less based on the range of the previous day, depending on how big that candle was. So with the pressure thresholds, what we care about, though, additionally, is the direction of the previous couple of candles, to see if we're moving along with the trend, or if we're doing something a little bit different than that. So putting this to use, there's different ways to use the pressure thresholds. They're an upper and lower resistance level for the day, meaning that, if you get up to close to the upper pressure threshold, the UPT, you're going to see some interaction there, and the same to the downside. And at the same time, if we get up to that particular level and we start to see a breakout happening, that's going to be a key level and a key breakout or breakdown. And then the other thing, and this is where they become particularly powerful, is using the pressure thresholds as a gap fill threshold, meaning that we've gapped away from the previous settlement. Okay, what does that mean? And is it just a little mini vanilla gap, or is this something more that needs to be thought of a different way? So on a typical trading day, the PTs are going to represent the band that the price will trade within, up and down. Okay, the UPT and LPT, the two thresholds, are more important support and resistance levels for this reason. Measured from the prior settlement, the UPT and LPT are almost never an equal distance from the settlement. This is one of the distinctions from the pivot series. The PTs are directionally biased from the prior near-term price action, depending on whether that was positive, negative, or just flat. The above is a key distinction from the standard pivot series, where levels are usually equally spaced and not directionally biased in any way. Here's a look at something different than what we previously saw. In this instance, we gapped significantly below the previous settlement. You can see that the attempt was to rally back up, but you can see here, price stopped almost to the penny at the lower pressure threshold. So the sellers were completely in control of the day and overwhelming the buyers. And you can see as it approached the pressure threshold from the downside, how that was a really, really important area of resistance setting up. Here's one a little bit different, and I'm going to talk about this again later on. So let's pay attention here to this particular slide. And this day we have kind of a fairly vanilla day going on. We're between the pressure thresholds. The upper pressure threshold is off the scale because I wanted to zoom this one in a little bit. But you can see how we had some positive price action early on in the session, but it faded, and this started to roll over. You can see at point A there, we interacted with the LPT, and then we just kind of went sideways here, and again tested it at point B. And then you can see that an impulse started to develop here, and we started to rally up off of the point B there, which was the retest of that prior low at the LPT. So this is, if you're using the pressure thresholds, you're going to find that you are all of a sudden discovering key levels of support and resistance that a lot of other people are just not aware of. Now, circling back to something we touched on before, the PTs are breakout and breakdown levels, and we'll go over that in a moment and do some examples. When price crosses a pressure threshold, it's a strong indication that one side, the bulls or the bears, have overwhelmed the other. This is atypical. And also is a trading opportunity. Like we said before, the price should usually be contained by the PTs, by the pressure thresholds. And when we break out above and below that, it's very noticeable. So when a pressure threshold is set and then broken, the trade has a high probability of success because something has really changed. And now you've got something on your chart to say, listen, the balance of power here has definitely shifted. Here's a look at a particular equity. This is just a fairly benign day. You can see that it gapped down, was kind of struggling all day to get positive, and was just kind of rolling along using the pressure threshold for an area of support as the day progressed. But you can see that as the day wound down, there was very little commitment from the buyers, and they actually let the stock start to break. But you can see that the breakdown was clearly demonstrated here by where the pressure threshold was sitting on the day, and that was actually a trading opportunity right there late in the day to take advantage of that end of day weakness. Here's another example, a little different setup where we gapped above the pressure threshold. Okay, that's the red line, and they made a little bit of a pivot to try to take new highs, but you can see that the new highs were rejected by the sellers, and this actually started to roll over. And you can see that there's something that's going on here that's actually pretty interesting, because you can see that after that new high was established, there was a break into the gap. And usually that's an alert. Okay, this has failed, and it's time to get short. Well, you're actually premature if you got short under, say, the 15-minute low or the 5-minute low, because price did nothing and actually went back up against you in the short term. But notice how that this whole chart changes character at point A there. And point A is where that you get that big downdraft and that big candle when it breaks the pressure threshold, because that was key support on the day. It gapped above it, collected some buyers. The buyers got overwhelmed by the sellers, and ultimately they yielded, and it was a big drop into fill the gap and then produce even more positive results if you were short below the pressure threshold there. Here's another look. This is a little bit more complex again with this example, but I think it shows the power of the pressure thresholds. This was, I think I took this last week when I was prepping for this presentation for you guys. We gapped up on the opening at point A, and we opened almost to the penny to the UPT, the upper pressure threshold. So now you want to wait and see what's going to go on with this. There's no trade there just yet because we're gapping right at the pressure threshold. But you can see shortly after that, in a very hasty manner, this thing filled the gap at point B. So we gapped to the pressure threshold, but not above it. We fill back in, close the gap, and then started collecting buyers. And then you can see at point C there, we take out the UPT and the previous high on the morning. So now you know if you have the pressure thresholds on your chart that something extraordinary is going on, and this is not going to be a typical day of trading because we've exceeded the pressure threshold to the upside and actually used it as a breakout. And in the first 15, 20 minutes of trade, this was really important information to have. Now, having just talked about the gaps, let's understand that 80% of gaps will fill in the same day. The larger the gap, the greater the chance of remaining open for the day. Now, the PTs are also gap fill thresholds. What they do is they will objectively quantify if a gap is large enough to remain open for the day. If a price gap exceeds the pressure threshold and remains outside for 5 minutes, there's a high probability that the gap will not fill that day. If a gap is open for a full 15 minutes, okay, there's a very high probability that the gap will not fill for that day. So we've got the opening range, as we call it at Tradesight, so the opening 5 minutes, and then the institutional range, which takes a little bit longer to play out, and that's the full first 15 minutes. So if we see this helps us quantify exactly when to expect a gap and go session versus a gap and fill session. So we saw that in the previous slide there, with Coinbase gapped up, but only gapped right to the pressure threshold, didn't exceed it, and didn't exceed it for 5 minutes, so it filled the gap. That's exactly what we're talking about when we say that these PTs can help us quantify when to expect a gap to stay open and when it should stay closed. Now, in this example, we gap below the PT. You can see the green line across the most recent day's price action. You can see that we do not fill the gap on the day. Okay, we gap down, so it's really not a long opportunity since it did not recoup the pressure threshold in the first 5 nor 15 minutes. So at this point, we're expecting weakness to persist throughout the day according to the pressure threshold there. Now this is natural gas. This is natural gas is not for the faint of heart. They call these contracts the widowmaker because they're extremely volatile and very, very hard to trade if you don't have proper tools. In this particular example, you can see the 2 pressure thresholds there above and below, and you can see that we gapped significantly below the LPT on this particular day and stayed below there the whole day and was just a day of weakness. So this is not a buying opportunity since we gapped below the LPT. Now you have a kind of a feel for what the pressure thresholds look like and what they can do. One of the things that we like to look at is that when pressure thresholds line up with other indicators, they have even more effectiveness. We refer to this coincidence as a double level. So, the pivot series, value areas, and other indicators are all relevant, but they're even stronger levels when they align with the PTs, which is a different study altogether. This example, if you look at the right half of this chart, you can see that we gapped down on the day and then rallied up into the value area. Okay, that's the lightly shaded gray area of that chart. Completed the value area trade, which would be to open and remain below the PT or below the value area for 15 minutes. Then we rallied up and covered, meaning we traded up all the way to the top of the value area. But when this was happening, obviously there was probably some positive trades put on and some long trades put on, and you would have been right to do so. But the question is, what is your expectation for this? Where are you going to look for exhaustion on this particular move? Well, you've got the value area high that's also basically lining up with the PT. If you look over to the left there, the PT on the day is 88.50. And you can see that the PT was just hammering on the attempted price advance, and ultimately caused it to roll back to the downside because it was a double level. You had the value area high and the PT. So when you have the PTs lining up with other valid lines of support and demand, these are going to be areas where you're going to look for failure. In addition to the pressure thresholds, we do have some other tools that we do lean on. Just keep in mind that we do keep it simple, but there are a couple of things that we like to use, as well as the pressure thresholds, to keep things kind of organized and to make sure that we've got relevant information that we need to use, but at the same time want to make sure that there isn't too much noise on the chart that we get, as I like to say it, analysis paralysis, where there's too much information and you don't know what to trust. One of the other things that we like to use are the seeker and Comer studies at Tradesight. And it's a little bit different than a lot of other studies because we've been focusing on price throughout this whole discussion. But one of the key things is that there's two axes on a chart. There's price, obviously, but there's also time. And the time axis often gets overlooked and doesn't get the respect that it deserves, and it's very important. And this other study that we're looking at now, which is the numbers counting over the bars, is basically, it's almost like a clock running where as a move starts to develop or play out, you want to know, well, how long is the move going to last? Well, not only is price important, but time is important because ultimately, buyers and sellers will exhaust themselves. They run their course doing what they need to do, and things are just kind of done. In this particular example, you can see that we're kind of contained throughout the day between the UPT and the LPT, between the red and the green lines. You can see that we did pivot off of the LPT right around noon and started to head up here. But we got up into the area of the upper pressure threshold. We broke above the VWAP, which was the purple line there, which would have induced a long trade somewhere around candle 5 there. Maybe you can see my cursor if I move this over here. So that's candle 5 of the count, as we call it, for this particular study. We're moving to the upside, but then we terminate up here at the 13, just coincident with the UPT. So that was your expectation on the day, and that makes that double level that we were talking about. So we had two signals firing saying, you know what, this is probably going to be the end of it, and it's time to move on. So that's one of the other tools that we like to use, which is the Seeker and Comer tools. Here's another look at how that works in combination with the pressure threshold. You can see the price was contained between the two PTs on the day. We gapped down, remained kind of quiet, but just consolidating along the lower pressure threshold. So no breakdown there. But the one thing we did do is at point A, you can see we got that 13, which is an exhaustion signal, meaning that we started over here at 1, wound up at 13 by the A, and we've got that green arrow pointing up at the 13. So that's your exhaustion warning, saying that this downside move that started the previous session is about to run its course. It's about to exhaust itself. And when we break back above the high of the day, and also coincidentally, of course, above the VWAP, the volume weighted average price, we rallied all the way up to the UPT in the area of that B area there. So this is just another way to use the combination where you have kind of a double level or a double signal, if you will, to kind of leverage the PTs to your advantage. Now we're going to go back, and we looked at this chart earlier. This is equity that was just kind of doing a vanilla day. It was contained between the PTs. We touched the bottom of the day at point A, retested it at point B, and then ultimately curled up in a very aggressive manner into the close with a strong finish at point C. On this next slide, we're going to look at the same chart, but this is in combination with the seeker and comber signal as well. And you can see that at point B there, coincident with the point B on the previous chart, we got a seeker buy signal, which means that the downside has probably exhausted itself, which had started the previous day. And we're going to curl up. And so that was definitely a buying opportunity there. So you had a confirmation there from the pressure threshold and the timing signal from the seeker and comber that produced a very winnable trade there, a very easy trade there into the close. So these are the kinds of things that we like to use in combination. And this is just another way to use the seeker and the comber in addition to the pressure thresholds to kind of guide you through your day, to give you confidence in what you're actually doing. So that's kind of the flavor for the pressure thresholds to the upside and the downside. Hope you have a little understanding of what they are. We can use them as a gap fill threshold. We can use them as support and resistance. And of course, we can also use them as key breakout and breakdown areas. And appreciate your sticking with us for the presentation. And if you have any questions, please feel free to reach out to either myself or Chris at Tradesight, and we'd be happy to chat with you if you'd like to learn more about these particular tools.
Thanks again, Rich, for taking the time to share with us today. Everyone in attendance will receive an on-demand recording of today's event, so keep an eye out for that email. If you enjoyed today's session, we hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We would like to remind you that the information provided in this was that of Tradesight and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Enjoy the rest of your day. We hope to see you in future webinars. Happy trading from all of us at NinjaTrader Ecosystem.